You're welcome, Kleber. So we'll be starting in 2 minutes. All right, welcome to the webinar. This is the last of my 4-day trade execution webinar series, subtitled How to Capitalize on the Monster Moves in the Markets. I should also have a thing here, How to Avoid the Market Traps. My name is Mark Shaws, I'm the Pattern Trader. This week we've seen everything. So I started the week sharing with you how I make risk-reward trades in the market based exclusively just on price action and price patterns. We talked a lot about the stock market. We talked about many trades, but the concept that I really try to harp on Tuesday was this idea of risk. You know, everybody kind of gets into a trade thinking how much they're going to make. And to my mind, my best trades, when, you know, I'm able to back up the money truck, is where I can identify very small pockets of risk and reward. And as you know, the markets have gotten much more volatile, it's been much more difficult to do that. So I'm going to just share with you, this is my email that went out yesterday to those on our elite daily email. Now, typically I send out a trade, but what I said in my elite thing is that as I already have a full menu of trades that are in sizable profits, I'm inclined to sit on my current open positions and not add any new risk. So there are sometimes times to hold them and times to fold them. Now, having said that, I was in, you know, extraordinary profits on the trades that I sent out to our elite members. So this is our open position management graphic. And over the course of the last several weeks, I've been going long pound New Zealand dollar and going short this ETF called the IGV, and going long, short ARK, going short the stock of coin, going short Tesla, and things of that nature. And cumulatively last night, we were up, well, there's not pips in the stock market. So ARK doesn't, is not measured in pips. But what I try and do is equate my FX trades and have some kind of apples to apples comparison. But effectively, if you'd taken these trades, you would have about $195 worth of profits on your open trades. And so this is, what we're able to generate at the pattern trader based on this. Now, a lot of this went backwards today because a lot of these trades recovered. But it always comes down to risk. So I have an early morning session. It's called the boiler room. And we, look at the market movements in the pre-opening sessions before the markets even start trading. And, my caution to those in the boiler room was don't do anything today. There is no pockets of identifiable risk and reward. So you can see this is what we've been looking at for the last couple of days, this pattern in the QQQs. This is the NASDAQ. And as you can see that these markets are subject to very huge short covering rallies. The market goes down and then it goes up. And then these things are huge. And so short covering rallies, I told you at the beginning of the week, can literally curl your teeth. They are more sharp than the actual downturn itself. And so this is one of those days where you had a short covering rally. Now, I can't share everything with you in a 4-day little get together, but, I look at the dance around the bars. So yesterday we had this bar that closed on the low. Now, typically, if I, am looking for, to get short or move to get, to go lower, I actually prefer the market to either open higher and go higher and then go that way. What I'm always very cautious about is when a market starts, when it opens lower like this did here, and then it starts going through unchanged. Once it goes through this unchanged, which is basically this slash market represents the prior day's close, then I know you're going to be fighting that the whole day. And so I really pay attention on how something, opens relative to its high and low. And again, by virtue of this thing opening, this slash mark to the left here is where this market opened today, and this is where it closed. And you can see that this was yesterday's close right there. So by opening all the way down here, and then I could see this thing as it opened, it started motoring higher. And, I know that, once it goes through unchanged, it's going to go the other way. So, I've been talking a lot about this market going down. I still think it'll go down, but you can see that, these markets, they open, and when they start going through the unchanged, then you're fighting it the whole day. And so, I have a few tricks of the trade that I know how to adjust my trades, how to get in and out of trades. And, I shared these with our members, every day in the morning and, in our other formats. So, we look at these patterns, and then I look at how the market dances within the pattern. So, if a pattern is showing me that it's a bear pattern, but it starts doing something else, I'm not all of a sudden going to be stubborn and say, well, I saw this in a textbook and this is how I'm going to do it. And so basically I draw my structure around prices, and then I see how prices move within that structure. So once again, I basically formulated, thing that, this was a bear price pattern, that this was a head and shoulders. But again, if we start, going the other way, this will start busting the implication of this, and we'll have a busted pattern, and I'll start trading it the other way. But I still think we're going down. This is still very messy, but there are certain times to put on trades, and there are certain times where you just really cannot identify the risk reward well enough to warrant a trade. So, let's pretend we don't have this bar here. Oh, here we go. I'm just going to take away what happened today. So I was saying, I'm trying to do away with this bar without. So this was yesterday. And I was saying even yesterday, this is, even though I thought this may go lower, and it did, the triple Qs went 1,000 pips lower. You could have bagged 1,000 pips right on the opening from a short trade yesterday. But notwithstanding that, to initiate a trade, there are certain times when you can initiate a trade, and then certain times where you really can't identify the risk, because effectively this thing dropped from here to here. It dropped from 365 to 325 in really a straight shot. And so now, do you get short right there? And so where's your risk? So the question I always ask myself when I'm getting in a trade is, where's my risk? Most people get into a trade and they're thinking about, how much am I going to make on this trade? And to my mind, the best trades are where, I don't know why I can't get rid of this thing, is where I can identify the risk. So you can see right up here, there was so once I kind of understood that this had like a head and shoulders, this was another head and shoulders, and that I felt like this thing was going to go lower. Once I started seeing a pattern emerge right here, I could then construct a trade. And I actually went short right there, knowing in my mind that I'm going to put my risk somewhere above that high. So in that particular case, my risk is about this much. Whereas if I get short here, I don't know where my risk is. Is it here? Is it there? Is it there? Is it there? The risk is too big to justify the trade. And so when you can't find a trade, you don't have to find a trade every day. You can back away from the market or go and find some other trade where you can identify the risk. There was a trade that I did, and it was on one of these webinars in QuantumScape, where this chart is QS, where I went short literally in one of these morning sessions in front of, all of the people in the boiler room. So let me just kind of do away with this, this noise here. So this was in a stock called QuantumScape, ticker symbol QS. And there was a whole bunch of bearish price patterns in QuantumScape that alerted me to this thing. So you had the double top here, you had the double top there. This whole thing was an M top. And so to my mind, this was over right there. Then you had another, double top here. Then you had another double top there. And then, you came to another area where you had the same thing. So this was just going down in a stair-step cadence. And I was looking to get in sync with the market. And you can see that there was two particular bars right here, where made a new high, close on the low, made a new high, close on the low. Those key reversals that, I talked about. So I see both the pattern and the price action, where again, during the day, it went to a high and then closed on the low, went to a high and closed on the low. So I saw all of these reversal patterns, all of this resistance level. And so when the market opened higher, and this is what I'm talking about, you can see this little left slash mark there. In the next session, when the market opened higher, I basically just sold into this trade. And I ended up selling 6 cents from the all-time high. I got it at like 29.76 and the high was 29.87. In my mind, this was my risk. So there are certain times in the market where the market gets into a certain coil where I can put on a much bigger trade because my risk is by definition much smaller. And I rode this thing from 30 bucks all the way to $24. And, I made about 300 grand in that cycle. There it is. And so there are times to hold them, and there are times, to fold them. So now it's very different shorting that trade there than shorting this trade there. Now I don't know where my risk is. I'm right into support. It could have a little, so I try and find areas of the market where I can get in sync with the market, but I can also identify the risk. And that's what it's all about. This game is about discipline and risk. And it's about, finding those choice trades where the market gives you a signal and you can identify your risk and reward. This is another ETF that I've been shorting all the way down. And there was a pocket right here where you had these 2 days effectively close on the high. So right there. And I knew this was a double top. We had two, and you could see this bar couldn't make a new high. So you had 2 days where it tried to push higher and it was stalling out, but I knew this whole thing was a downtrend and there was preceding patterns and on and on. We were looking like we had a head and shoulders here. So that I put on a trade there, knowing that my risk was very finite. In my mind, if I put a risk here, if I put on a trade there, I wasn't going to risk too far above that high. So you can see that's my risk and that's my reward. And this is what I try and do. Now, once the trade starts going, now, you get short there, you get short here, you don't know where your risk is. And then you have a short covering day like today, and then you're exposed. So it's all about, risk and reward. So yes, I did close out a lot of things and they're right on the opening. So when I see something opening right at the low and then start motoring up, certainly as it gets to that unchanged, so you can see how it got to yesterday's unchanged and then you're fighting it the whole day. So that is just, by virtue of experience, I learned the hard way that, if it opens below here and starts going through the previous day's unchanged, I just get out, flatten the trade. Sometimes I'm aggressive. I'll go the other way. So I look for a dance around the bars. So if I'm looking to short against a key reversal, really what I'm hoping for the next day is this thing to open and even go higher and then go that way. What I don't want it to do is open lower, go a little lower, then start coming back and then start going through unchanged, and then I'm fighting it the whole day. And it's the same thing on the downside. If I see a key reversal that indicates that, I want to buy this market, ironically, I want to see this thing open lower. And just like QuantumScape, what I'll, if it opens lower, it allows me to minimize my risk because I can buy it there knowing that this is my risk. So I've got a very small amount of risk. And if I'm right, this thing should take off. And so I want to see something open lower and then go higher. I don't want to be, buying something up here as it breaks out, it goes a little higher, and then it starts coming back to unchanged. Because then it starts creating the conditions for a key reversal the other way. So there's a certain dance, a certain thing that I look for, and it all comes together. But so this is the IGV ETF. I still think it's going lower. It's just it's very dangerous, as you can see, to be short the market. The market is. It kind of gets into this vacuum where you push that ball, further and further and further, you push it, and then it just kind of needs a vacuum. And then you get what's called short covering, which is a phenomenon where people are buying, and in order to get out of your shorts, you need to buy also. So it just creates more buying. So, these short covering rallies can be absolutely, hellacious, and they just don't let you out. You don't see a down bid during the whole thing, and that's how you know it's kind of a short covering rally. So where this goes now I'll just watch the market, right? So, I still think it's going lower, but now I just need to, wait for it to sort it out, and kind of give me, something where, I can then sink my teeth into, and it tells me, okay, now this thing's ready to go down again. And I can, now, if I see a day like this, I can understand if I get in here, this is my risk. So at least I have some measure to define my risk. Right now, it's a pick 'em. Where this goes, where it stops, nobody knows. So now I just wait for it to shake itself out and get back in again. Prashant says, what do you expect to see tomorrow from what? We were down whatever 2% and then rallied 3%. So we had a 5% day today. So the volatility, is just incredible. The S&P had like standard deviations of volatility well above normal. And so the markets are, just very, very, and I said at the beginning, you need to understand what you're doing, and you need to be cautious in this market because the volatility will literally take you out. So this is the S&P, and I'm just going to see how we so once I kind of see how the markets, move within certain levels, I have a hard time seeing this thing going, back up through this. So I don't think that this is going to be sustainable, but it doesn't matter what I think. We'll just have to see how does the market follow through, or does it start failing? So we hit an interesting kind of support line right here. So you can see how these markets come exactly to certain levels on these charts. So you can see when you connect all this thing, that it came to a support level from this thing. So now you've kind of got this reverse triangle, and this could certainly be a bottom within the triangle, and it could go back up, or it could go crap out and go back lower. So I still think that we're going lower, but this is certainly messy, and now I'll just wait for it to sort itself out. You don't need to be a hero and just wait in here and figure it out. Whether it's going to go up or it's going to go lower, it's going to need, some measure of time to, put on a few bars so that you can kind of, see if it's digging in or, going to go higher. So whenever, I get this volatility, I kind of go to higher time frames and see if anything's changed there. And so not a whole lot you can tell right now. I think that on the monthly we're still kind of within this, and these lines are right now, there's really, you still have this kind of ascending, broadening thing. So you snuck out, and this is what these things will do. They'll sneak out, and then they'll sneak back to the, in this case, the resistance line. So that's the monthly. Then I'll take a look at the weekly. And to my mind, you get a lot of misdirects in the market. And to me, you have to keep an eye on the patterns. And until the patterns are taken out, so we have this head and shoulders, and all you did was sometimes you will sneak below in a certain breakout area, and then the markets will, come up and retest it. And then if it takes this out again, then it's real. But I still think that this head and shoulders is still there. And so, now this could be a bottom. And so I do this all day long. I play these visualizations all day long. And really what I'm trying to determine, what is the governing pattern? What is the pattern that is going to govern or dictate the next major move? And so, the market throws you all kinds of looks and counter looks. So you potentially have this double bottom now, these two reversals. And if the market starts, coming through here, then, that'll tell you that the market dug in and it's ready to go higher. I don't think so. But this is where, the fun comes in, where you've got to figure out which is really the governing pattern. So to me, we had this ascending, broadening price pattern. You snuck out. Sometimes they sneak back to the resistance areas and then they go back down again. So, what I do is I simply draw boundaries around prices like this. And then I sit back and observe, how does the market respect these boundaries? Does it come back in here and start going back up here? Does it hit here and start resisting? And so basically the market is a fluid and dynamic, marketplace by definition. And so I'm constantly, adjusting and readjusting based on what the market is telling me. But I'm not listening to analysts. I'm not listening to inflation. I don't know if Putin's going to attack. He's not going to attack. I'm just looking at areas of risk and reward where I can make certain informed trading decisions that, if I put, my sell stop there and my risk there, then I just put my trade on and let's see what the market does, with respect to these things. And again, you don't have to be right on every trade, but you can see that, just on the parcel of outstanding trades we have, just made enormous profits in the markets. So, the big question, the other one, the big kahuna is Tesla. And to me, yes, I mean, you had a very fancy day today, but it really doesn't change the dynamics of what I'm looking at. To me, the pattern is still there. And until we take out this pattern at 1200, to my mind, this is still, a top here. And if a market's put in a top, then by definition, it's going to go lower. Now, a couple of weeks ago in my morning session, the boiler room, I made a joke about Tesla, because I've been saying for a long time that I think this thing's going to come off, and it's come off hard. But I also said that I think it's going to be very, very tricky to catch it. You're going to have these $100 downdrafts, and and then you're going to have to withstand it coming back in your face, and it's likely to do that. And so the metaphor I used, and I don't know if you guys remember this movie, I think it was somewhere in the 90s. It was called The Shawshank Redemption with Tim Robbins and Morgan Freeman. It was the greatest prison movie ever. And basically, Tim Robbins, spent 20 years hacking through the wall of his cell, and he was eventually able to break through. And then when he got into the, meat and potatoes of the jail system, he had to crawl back. And in order to get all the way out of the jail, he had to crawl through a half a mile of sewer in order to get to the other side. And so I kind of made the joke, I think that's what Tesla is going to be like trading. That basically you're going to have to crawl through a half a mile of crap in order to get to the other side. But I do think this is where you kind of just have to, have some faith in the, in what you're looking at here. Now, if this starts going back up and not respecting this, then then it starts busting the implications of that pattern, and you can say it's a busted pattern. But to my mind, you broke a very long-term resistance, and all you really did, and this is what markets do, they break out, everybody gets excited about the breakout, and then they have a way of retesting that breakout area. So I think that we're basically just retesting it, and we will eventually go down. But this is the nature of, the markets, and especially trading Tesla, where, goes down, you think you got it, goes back up 150 bucks, goes down, goes back up. But, I think eventually this thing should give way. And to my mind, this is where I kind of have faith in the patterns, and you've got to just empirically look at that and, forget about all of the noise in the market. So there's two reversals right here. And I don't think these guys should be taken out. So whatever that is, 9 something, I don't think you're going to come and, take that out. So you could fight like hell in here, but eventually I think you're going to, come down. So I will just look for pockets of resistance. I actually sold into some Tesla on the close here, to be quite honest. I didn't even have a signal. But my mind is that, I'll get in now, I'll take a nibble now. If it goes higher, I'm going to take it, I'm going to actually keep shorting into a higher market. And at some point, if the market keeps going higher, I'll get out, I'll take my licks, and, I'll look at another trade. So, but you don't have to do that. And I shouldn't have even shared that. wait for the market to tell you when, is the right time to get in. And the market will tell you. So you just need to have the discipline to kind of let this go by now and shake itself out and do whatever it's going to do. And then have it tell you, where there's a set of days like that, where you see all these reversals, and now you can get in here knowing that your risk is there. So, right now you can't quantify where your risk is. Do you get in here? Where do you put your risk? Here, here, here. It's all arbitrary. So it's much better to let the market tell you where your risk is. And it's just interesting how these, I can visually see how we came exactly to this area on this chart. So it was a logical support area. And then here's, so we may have to bang back to 850 or 860 before it starts coming back down again. So you guys there's a side discussion about Putin and this and that. And if you guys are doing that, then you'll never understand trading. So trading is about blotting out all of that stuff and looking exactly what's in front of you. So all I look at is a clean or a naked chart where there is no volume. There are no, moving averages. There's no, Bollinger Bands, and 1,000 indicators that you see on a lot of these, webinars where they're trying to, talk about some, moving average crossover or what have you. I try and look at the big picture. And my whole objective is to take out pieces of the middle out of moves like that. You can't get in the beginning, can't get in at the end, but I'm just trying to take chunks out of the middle of, big trades in the market. And if you can learn to do that, you'll be consistently profitable by trying to, dart in and out 10 times a day, trying to get 3 pips here or, $10 there. You will end up just giving it all back to the brokers. So I basically said what, so I'm not going to look at a whole bunch of charts. If you are interested in my program, the Underground Trading Session every Friday, tomorrow, 11 a.m. Eastern Time, then I go through all of these charts. I go through all of the currencies, all of the stocks, and then, I take requests as to what charts to look at. So if you're interested in that, check out the Underground Trading Sessions. Really what my intent was over the last 4 days is to share with you a way of understanding the markets, breaking apart the markets, where you don't have to be an MIT economist. You don't have to stare at the charts. You can establish your risk reward parameters, put your trade in, and walk away. And so it should be just as effortless as that. So you could see that this was an area just like the IGV, where you had 2 areas right here. We had this double top. We had these 2 highs, and it just couldn't go, any further. Now, I actually just shorted on that day. I have learned to kind of recognize these days ahead of time. But frankly, you could have just put your sell stop under this little narrow range bar, this inside bar. So I talk about this inside bar strategy where literally the range of this day from high to low sits within the range here. So it's called an inside bar or a narrow range bar. And typically the way I do this is just put a sell stop right here, a pending order. And you can see the market opened higher, there, went a little higher, and then hit that pending order, and then you never look back. So that's really what trading should be. It should be effortless. When you put your pending order there, you put your stop loss somewhere behind it. So that's your risk, and that would have been your reward on this trade. So Steve says, you keep me focused and I can see the chart so much clearer. I made a bunch of money in puts and shorts today, plus futures trade. Thanks a million. You are welcome. So to me, it's all about risk and reward. And there are certain areas like this where the risk is very small. And then there are certain areas like this you get in here and you don't know what your risk is. Do you have to risk back up to there? Does it go there and then there? So there are certain times where, you need to hold them, and certain times when you need to fold them. And so Mark says, join the accelerator program. To get access to the accelerator program is I have a weekly video and weekly email, and then also you get to be part of the underground trading session. So frankly, I don't even know what we do. If you're interested, send an email to support@thepatterntrader. After these webinar series, I'm sure you're going to get an email from our team. I'm not here to sell you on anything. I basically am sharing with you the information. If you would like to, get good at this game, then, love to have you. If not, I'm sure, hopefully we'll see each other somewhere along our respective journey. So Sunzen, sometimes I see so many double tops, I don't know which one I should take. So that is the trick, son, and that's why you should join the elite program. So that'll be the only plug I have, because that is really what it's all about, is kind of discerning what is the governing pattern in the markets. And the markets will throw you all kinds of looks. And there's a way these patterns confirm each other. There's a way these things set up. And that's what I try and do at on the elite program, is to sort the misdirects from the the real trade. So this one, again, we grabbed some support here, and now it's going to be very interesting to see how we play within this thing. So it looks like we're in this kind of cadence, and I wouldn't be surprised for this thing to go back to 850 or somewhere up here and then start going back down. But we'll have to see. So Addie says, I wasn't able to get your book. So Dwight, do you have the link to the book? I do. Let me get it here. So I talked about the book yesterday. I'm going to put it in here. It's really a pay what you want. And then I donate twice that to the American Childhood Cancer Organization. So this was my book that I put out yesterday. It's a pay what you want. You click here, decide how much you want to pay. And then whatever you pay, I will double that amount and donate it to the American Childhood Cancer Organization. So I think I donated well over $35,000 in the last 12 months to this organization based on all the royalties I get from my book. So if you sign up, Carson, I don't send the book anywhere. It's a download. And let me just put that into chat also, into Dwight, are you there? Can you put the book into the link into YouTube?
Yeah, I'll put it in YouTube.
Okay. Yep. Basilius says, after 4 days, I'd like to thank you, Mark, for the first time I've seen you. But I've got to get used to the bars. So what I would really appreciate, Basilios and others, is, hopefully I've given you guys some good information, but, I would really love to hear from you. I'd love to hear your opinion, and would really, like if you guys, and I'm going to put the link in the chat box, if you guys could leave a review. It, really helps me to understand if, I'm reaching you guys, if this is clear, if, this resonated with you. And please don't, just feel, obligated to put, glowing reviews. Just be, completely transparent. Tell me if you didn't understand it, if it sounded like Chinese, if it's not going to be of any use to you. Is your program appropriate if I only trade options? So basically my philosophy on options, Anthony, is that Options are based on the underlying. So if you understand the underlying, which is Tesla or whatever the underlying instrument, then you'll buy a call if you think this is going up, or a put if you think it's going to go down. So I don't pretend to have, this intimate knowledge of options. I basically buy a call or a put if I think there's going to be an explosive move in that underlying. If I think, we're going to have a big move in a certain time frame, then I, may decide to put on a more leveraged bet. It's far more risky to do that, but the payoff can be terrific also. Timothy says, is it good to wait 45 minutes after the market opens to place your trades? There's no prescribed, time. Basically, I, send this thing, and then, you could just put your sell stop in there, as you receive the trade or in the morning. And then, but really, again, there's a bit of a nuance, and it's hard to explain everything. So if I send an email and, with the sell stop, and the market starts, just opens underneath the low. Now, sometimes a gap will hold, and, I kind of have a whole way of approaching that. But if you see that the market is going to open underneath, where the market closed, I wouldn't just automatically put that order in there. What, I'm hoping for is that if the market opens and goes higher, then you can put your stop there. So what I'm looking is for the market to confirm what I'm looking at. So if the market keeps going, the beauty is that pending order will not get triggered. And conversely, if the market goes up for 3 hours, you don't have to sit in front of the screen and watch, and then turns and hits your thing, then you'll be placed into a good trade. So to me, market is energy, right? So I want the energy to be building before it hits me. I don't want it to be dissipated. So I don't want it to just open down here. So that means, this thing has basically gone down, 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 down. And I'm getting into it without a release. And then typically the markets need some kind of blow off like this, where it goes down. This is just a blow off release so that it can go back in the direction. So these markets, are energy. I think of them in terms of flows of energy. So, you never see the market just kind of going down and then going down and then going down and then going down and then going. And if you do, you certainly don't want to enter that market there, right? Because you know what's going to happen. As you enter, you're going to get one of these. And so I wanted to build this energy before it hits me again, so that I have all of this energy to then send it to a new low. I don't want to, get the trade, as the energy is dissipated right there. So, but, if you want to play a gap, and it opens, then, I kind of, if it opens lower and I really think, well, maybe this thing's going to gap and keep going, then I'll basically just play a game where I'll wait for the opening hour range, high to low. And then I'll basically just stick my, stop below the low and my stop loss somewhere up there or up there. So there's certain ways you can do it, but by and large, you should wait for the market to come to you. Wait for your right trade. So, there are certain times where you just know you have that trade, where there's a reversal and then the market opens, higher. I typically short right into that because I figure this is my risk and I've got a very small amount of risk. So there are certain times where, you have a reversal here and the market, goes higher, and you can short against that, and that's your risk, and then it just goes lower. So there are certain times where the risk reward is much more friendly than others, and what you don't want to do is be caught in these kind of things where you've got untold amount of risk and you don't know really where you're getting in. So you have to get in, everything's about buying right. If you buy right, then you'll be okay. Meaning if you know where your risk is, and if you can find a pocket where the risk is very, very small and wait for that setup, the market will always come back and give you your setup. But if you chase these things, then you get hooked into this. So, this is where emotion comes in, and that's where most people get killed. So Bertie says that sums up 90% of my trades for the last 2 months. Well, that sums up what most people are doing. Most people are doing emotion. And so the market is a structure. And what I do is I draw boundaries and structures around prices and wait for pockets where I know, like QuantumScape, where literally there were trades in QuantumScape where I felt like I didn't have $1 worth of risk. And so, I can load up and just put so much money in there, and it looks reckless and it looks ridiculous. But in my mind, I know that my risk is so small and my reward is so much bigger. And that's what it's all about. Trading is about risk and reward. Everything else is noise. Everything else is noise. Norman says, outstanding training. Thanks, Norman. Again, I would really appreciate if you guys could put a review in Trustpilot. It's a verified thing. It's a way that others who are interested in our programs can review what other people say, not what I say. So it says Trustpilot just bombed. I don't know about that. So if I go write a review, seems to be okay on my side. Maybe not. Okay, so yeah, you can put your review right there. So maybe this link will work better. Dwight, if you could put that in YouTube too. So yeah, please, kind of put an elaborate thing. Don't just say this was great or this was bollocks. Try and use your words, as I always tell my son. Paul, you are welcome. Yes, Amir, if you are interested in the elite, we will certainly work with you. And, we try not to make the price the obstacle. So we really want to make this education available, and we will work with you. Our team, will call you, or you can call them, and they'll work it out with you. So if you want it, we'll make it happen. If you're a good fit. Jose says, my trading and understanding of where and when price is likely to move is vastly improved since watching these live webinars. So if you could just cut and paste that, Jose, and put that in the reviews, that would be excellent. So Audrey says the elite is sold out for February. It could be. Sometimes we get, it's really meant to, be a, it's not, open to the public by design. So if you find that it's, it's closed out, then, our team member, I'm sure, will put you in the queue and give you a call when we open it up. Let me just send a message to one of my team members, because I don't know what's going on, what people are clicking and finding out. All right, so Fergus is bunky buy a donkey, so you're welcome. Thoroughly enjoyed picking your brain. Looking forward to replicating your success. Yes, Michelle, our elite program does include all our morning boiler room sessions. So the elite program really includes everything I do: a gold funnel, the weekly email, daily email, personal trading sessions, so things of that nature. So the boiler room, yes, I think that is what's it's all included. Tracy says, you're solid. Nice to see you stick to your trading strategy and not change it every 6 months. Love how you trade in the simple entry risk. Pierce says, this is a very structured and precise approach. I was day trading with all these indicators. I won't anymore. Is this a yearly subscription? So we have different time frames, Grace. We'll tailor it to but I think the minimum is 1 year. Yeah. So it's really designed for those who really are serious about their education. We don't want, a bunch of looky-loos and people who kick the tires and people who are not committed to themselves. This is really about a commitment to yourself. Do you want to, advance your training, your knowledge, in the markets? And to me, risk is a function of knowledge. So, you see the markets going all over the place today, and there is a lot of risk in the markets. And to my mind, risk is a function of knowledge. So, if I needed a heart transplant, it would be very risky if I went next door, knocked on my neighbor's door and asked him if he could just open up my chest cavity. It'd be far less risky if I went to the Houston hospital and got Michael DeBakey, who was, I don't know if he's still around, the, #1 heart transplant surgeon in the world. It would be less risky if he did it than my neighbor did it. So risk is a function of knowledge. So people look at the markets as this giant mystery or this very esoteric and complicated thing. And it can be. What I try and do is reduce it to something that, I could explain to a 6-year-old. And if I can't explain this to a 6-year-old, then it's too complicated and I need to walk away from that trade. The best trades to me just, pop out. I go through chart after chart. Basically, I just open my program. I go through all of these charts every day, pop open a chart, look at what it says. And, if it doesn't speak to me, then, and I can't explain it, then I'm not going to do it. So this is the euro. The dollar obviously went higher today. And so DeBakey is dead. Yeah, he probably is. He was operating in the 80s. It was just a metaphor. Cardin says, I lost today on the rally and day trading the Dow. Well, I don't advocate a day trading method, right? So I'm trying to look at the bigger moves and get in sync with them. And what you're getting now are these very async, these crazy moves up and down. And if you're trying to time those, you're definitely going to get taken out to the park. What you need to do is wait for things to slow down so you understand when to get in, to the next direction, the next movement. So the Dow is at a pretty interesting juncture. I looked at it close and I could make the case now for, it being in, 2 different formations on the daily. And that's why if I'm a little confused, I'll peel back to the weekly. So we kind of have this broadening top or broadening bottom, and it's going to be interesting to see which one it is. So this is kind of the reverse of the ascending triangle. This is kind of like a broadening. It's a reverse triangle or a broadening bottom. So, if this is a bottom, this is going to go back up, but I don't see that. So all we did really is catch a bid. These markets, go to these prescribed areas and then they find, areas of support. But to my mind, I think that this thing is still going to find a way to go lower. But today's certainly complicated things. And so now we just need to wait. Just wait a few days, let it sort itself out. You don't have to trade every day. You don't have to throw yourself, on top of the carnage to figure out what's going on. So to me, this is still really the prevailing pattern. And until this is taken out, I still feel like, you need to short the rallies. So, we'll kind of see how this plays out. We've got all of this risk going on in the market with Russia and all this exogenous risk. And so typically, sometimes you get these breakouts, you get a retest, and, we'll see. But, I'm looking at these reversals here, and I just don't see the market doing that. And this is what I do all day long. I put structures around here, and then I game out certain scenarios. Can I see this thing doing that? Or is it easier to see it doing that? And then how's it going to get there? So, sometimes it's easy, and then sometimes you get in these zones where it goes from 36,000, drops 4,000. And so that's a 15% move. So you are going to get these pullbacks. You have a 15% down move in the market. You're going to get this pullback before it goes again. And that's what the markets do. They build energy, they dissipate energy, they build energy, they dissipate energy, they build energy, they dissipate energy. And so, this, looked very violent today. But if you kind of put it around a structure like this, you can kind of, slow down the cadence and see, a little bit better what's going on. So I still think that these markets are coming lower. But Udik says, can you say a word about trailing stops? I can't, because every trade is different, right? So where I get in, what my expectation is going to be different. So if I'm expecting a monster move, like with Tesla, and I get in today at, 800, I'm going to give myself, some room. You could see that upper limit was around 850. So, if I'm looking for a $300 move in Tesla, I'm not going to put a $15 stop. And then even if I get in at 800 and it goes to 785, I'm not going to bring my stop, loss down, because, it could just do another move, get me out. So it's very tricky to talk about, trailing stops. So typically what I do, and if you look at my email, is that I get in a trade, and then if I'm looking for these things to work, I have my stops way away from, the noise. So today we bounced, but it never took me out. So you can see IGV, I was in at 345 and it went to 307 this morning. And my stop is at 345. And what did it go to today? 336 or something. So, but that would guarantee me $10 profit, even if I got stopped out. ARC, I got in at 71, and my stop is $13 away, and I never moved it last night. And today we had a $5, move higher. ARC went from 60 to 65, but my stop is still, $8 away. So I'm not, looking to suppress moves if I think they can build into greater moves. So you can see Coinbase, I got in at, 189. I think it had earnings today. What is Coinbase doing? Coinbase is down $5 in the aftermarket based on earnings. So I got in at 188 and it's trading at 173, and my stop's all the way at 197. And you can see I haven't moved it, because if I feel like this is going to, go much lower, I'm not going to compress it and cut it off before it can do that. On Tesla, I got short at 850. My stop's at 875. Even though it went to 700 this morning, I didn't move my stop. If I think Tesla's going to 500 or $300, yes, you get in these violent gyrations, but I'm looking to stay in that trade. So the discussion of stops and take profits is very complicated, not because I'm trying to avoid it. It's only because every trade, every environment is different. And, because you have such big volatility now, if you've got very small stops, it's like the FX market. Most people play the FX market where they're playing with a 10 pip stop or a 15 pip stop or whatever. Pound New Zealand moves 300 pips a day. How are you going to control a trade with a 15 pip stop? You're just going to get stopped out all the time. So what I try and do is, try and find one trade where I can get in Tesla at $850. And, today it went to 700 and back to 800, but I still got $50 of profit. It may go back to 850 and then go back down to 500. So, it's just the violence of the markets. You have to give these things room to move. Remember, my objective is to take the bigger chunks out of the market. Now, you could have gotten in here at 850, and when it gave you a look today under 700, you're welcome to take those profits. I mean, there's a limitation of a daily email service where, I update it, at the end of every day. But this was in, all kinds of profits. You would have had $150 worth of profits this morning. So, I always advocate that if you have monster moves, take off 20%, take off 30, take off 40% of your position. You can, you can't get hurt taking a monster profit. Yes, I'm still in Tesla, but it's very possible, as I drew out, that this thing retraces back to 850 before it goes back down again. So no, I don't use Fibonacci's. Yes, Uday says your expectation of the trade drives your stop. So some environments, are very small where, I see a 3-day move from here to here. Some days and in some environments, it gets much more violent. And, now I see, Tesla opening up a path to bigger moves. But I also said, just like the Tim Robbins, the Shawshank Redemption thing, that you're going to have to go through a lot of crap to come out the other side of Tesla. So, sometimes you got to figure out, is it worth, kind of going through these monster moves to try and catch something? And to my mind, it's just waiting for a time. So it's all about understanding the pattern. And I think I understand that these are by and large bear patterns. So that if this thing moves up and then gives me a key reversal, an inside bar, another key reversal, now I can understand this is a very fertile pocket where I can understand where to get in and where my risk is. And so that's my risk. So it's a much smaller risk than, if I try and short it here and then, it goes up there. So there's a time and place to put on these trades. And, the whole thing is to wait for the market to come to you. I don't have any puts on Tesla, Pamela. I have the stock. Just too difficult to time the options and too expensive. So I don't have the options. I'm short the stock. It's expensive, but that's just the way it goes. Sursec says, do I think Pound New Zealand? So Pound New Zealand's gotten more complicated too. I thought it was going to have an easier trajectory, and it's just there's so much noise in the markets. But I do think this will find a way to go up. I do. I wouldn't just step in arbitrarily at any level. But if this shows signs of stopping somewhere here, we kind of have a reversal today. So you made a bit of a new low. So, if by, tomorrow it looks something like this, then I may look at buying it again, buying another one, putting my, risk there. But I do think that, this downtrend will stop and it'll find a way to go back up. So sometimes we see these patterns, and yes, this is a double bottom, a double top, and it did lead to an interim sell-off. But I do think that the long-term trend is higher. So we'll have to see how this works out. It's going to be pretty interesting. Pound New Zealand has been a very tough trade, and I probably should have just taken some profits. I've been in since 192 back in late November. So I still have 700 pips on this one trade. And maybe it's, crazy to just sit in this trade and expect, much more right away. But I thought that this thing, once it cleared this resistance, was going to get going. But, the more it kind of does work here, the bigger the future move will be. And I still think that, again, it's like Tesla, where you just have to trust the bigger patterns. And I think that this pattern, I don't see that that's going to get taken out. So, if this is a bottom, then this should find a way to keep going higher. But it's certainly been, made more complicated. We basically retested the breakout, and this is what, these things will do. they'll break out, retest the breakout, and then, you know, if it starts coming back up here and clears this, then you know that it's really good. All right, I'm going to leave it there. I would really appreciate if you guys could leave a review. I think I put out a lot of energy this week, and you know, I just would love you to reciprocate. I know everybody asks you to, you know, put reviews, but I would really appreciate it, and I know our members would, and I learn a lot. So, you know, this week there was a lot of turbulence, and, you know, I could understand, you know, if you came away from this thing maybe a little bit confused. So I would really like to understand whether you did or didn't, or if this simplified things for you. So Al says outstanding 4-day, and this is great week, very beneficial. So again, if you guys could, you know, put your thoughts in that. Deshaun says, I already joined one of your programs, but would like to sign up. Where I see the email once. So you'll get probably an email from our team. Misa says, this is the best 4-day live event so far, and I've watched a lot of them. So Misa, if you could just put that in the review, just cut and paste that, I would really appreciate it. So whenever I get those things, I'm always, you know, and I get a lot of them. You know, people say this is, you know, really cool because it's really simple. So to me, it's the simplicity. You know, simplicity is the ultimate elegance. So whenever I'm looking at design or anything, if you can break everything down to this most simplistic form, that to me is, you know, if it's so complex that you can't understand it, then there's something wrong. And I always feel like I should be able to explain what I do to a 6-year-old. And frankly, a 6-year-old would understand it better because we come in with so much garbage and so much filters, and we'll go back and listen to the TV and listen to what Putin said, and it will confuse our trades, where a 6-year-old will just see this and do it. And so that's what we really need to be, is, you know, unfiltered. But I really appreciate that. And Timothy says, you're a fantastic teacher. I will follow you. So thanks for that, Timothy. I appreciate it. All right, guys, take care. Dwight, thank you. And, you know, you guys be safe.
All right, Mark. Thank you so much.
Okay. Thanks, guys. Cheers. We'll see you soon.